Most traders are jumping around from 3 to 4 and sometimes 5 time frames trying to figure out where price wants to go. And all that creates is a lot of confusion when it comes to trading these markets when candlesticks print live. And what if I told you one time frame is more than enough to build a biased narrative and even take high probability trades from? And in this video, I'm going to show you exactly how I do that with a step-by-step plan, how I approach the markets with one time frame alone by building my own bias. There's no indicator, no overcomplicate. It's just a simple approach to the markets. This is using the structure within the market and using time-based logics to trade the market the right way. And with that being said, let's get into the video and break all of this down. Trading one time frame isn't as simple as looking at the 5-minute or the hourly time frame and buying and selling because you feel like it. You need to look at very specific things that happen within the market, and when they come together, that's where you'll find your high probability trading setup. And this video is going to be very special because I'm going to clear all confusions that you may have. I'm going to dive deep into understanding a time-based range that only my one-on-one students know exclusively. The information that I give you, those of you that actually want to become better traders and become independent traders, you're going to take this on board. You're going to take the notes, back test this and forward test it, and then the results will follow. Those of you that are lazy and you don't want to put in the work, you've clicked off this video already, and that's why majority don't make any money from these markets. They don't want to learn how to do it. But with that being said, let's dive deeper into this video. The elements to trading one time frame are very simple. We have liquidity, we have a range. We're going to get into the time-based range later in this video. Then we have a change in the state of delivery, and finally we have entry. These 4 elements come together and make a very high probability trading setup. And once you know exactly what to look for, you don't need to look at the higher time frame. So the main time frame we are going to be focusing on is the 5-minute time frame. That's where you're going to find where liquidity rests within the market, where your range is going to be made within the market, where the change in delivery is going to happen, and where your entry is going to happen. You don't need to look at the daily, you don't need to look at the hourly, you don't need to look at anything else. The 5-minute is everything. So when you go to trade the markets, if you're going to trade the Nasdaq, which I only trade, you are looking at the 5-minute time frame, and this is for the London session. You're going to focus on my blueprint model and the time, which is 3 a.m. The 3 a.m. holds a lot of importance because this is where the market opens for the London session and volatility gets injected into the market. And normally at 3 a.m. you are looking for a liquidity hunt, which is where liquidity comes into play. And this is all going to be found on the 5-minute time frame. And after that, you're going to find your range. So you're going to find any range that's made within the market. And how does a dealing range form? Very simple, using swing highs and swing lows. So if we make a low right here, market pushes higher, and then it makes a high. This is where your dealing range is going to form. You have buy side liquidity, which is going to be above this high, and you have sell side liquidity, which is going to be below this low. So waiting for 3 a.m., you're going to wait for the market to take out one side of this range. So wonderful. We've identified liquidity and a range just using the 5-minute time frame. And don't worry, we are going to get into the charts as well, but I'm giving you the basic understanding. Now, this is where the fun stuff comes in. Introduction to my blueprint range. The blueprint range starts at 112 and it goes on until 212, and that is the time-based range. And that's where you're going to find a predetermined range is made within the market, and it's going to hold buy side and sell side liquidity. So above this range, you're going to see buy side liquidity. Below this range, you're going to see sell side liquidity. And how this blends together with what you're already trading is very simple. So you've identified your original range. We have a low, we have a high. Within this, your time-based range is going to occur. We're going to color this in green. You are waiting for the market to open up at 3 a.m. Once we take out the liquidity above the range high and the time-based range high, this gives you a lot of confidence to sell this market because everything comes together. We've identified our pools of liquidity, we had an original dealing range, and then we had a time-based range that was made within it. So you can see price pushes higher, takes out the high of the range, we take out the buy side liquidity using only the 5-minute time frame. And then this liquidity hunt happens at what time? It happens at 3 a.m. So you see where everything is coming together right now. Then the next thing is you wait for where price changes delivery. So this is where we had up close candles were formed within this price move. So in a bearish market, up close candles are going to support the market to the downside. And in a bullish market, down close candles are going to support the market to the upside. So you can see this is where we change delivery, and that's exactly where you can enter from. And this is where the four elements come together, giving you the ability to trade one time frame. You don't need to look at the higher time frame. You don't need to look at the hourly, 4-hour, daily, or whatever. You're going to focus on the 5-minute time frame. And now my blueprint time window, which starts from 1:12 and ends at 2:12. And that's exactly how you're going to be able to trade it. Now, with that being said, let's move on to the charts. And with that being said, we're going to move on to the chart examples. But if you did want to learn more about these time-based windows and learn about the why aspects to the market, like why does the market go higher? Why does the market go lower? Why did the market do this thing at this exact time? That's exactly where my Blueprint Academy answers all of those questions. But the thing is, the Academy is only open to an application process and an interview process. Not everyone gets accepted into the Academy. So if you think you got what it takes and you truly want to learn about the markets and you care to change your trading, well, that's only when you should apply for the Academy. So if you think you got what it takes, go into the first link in the description down below. I'm going to break down this price action on the NASDAQ from the 30th of July. So you can see we have a low and we have a high. So this is our time-based range. This is the predetermined range that's made within the market. And this is from 1:12, finishes at 2:12. We have the buy side liquidity above this high, and we have the sell side liquidity below this low. So a lot of you are probably thinking, okay, so this is the time-based range. I've identified this. What about the overall range within the market? Well, let's talk about the overall range within the market. You can see this is the low that we made. Once we made this low, the market pushed to the upside. So this low becomes important to us. So this becomes a low of the dealing range and this becomes the high. But for me, I'm trading this price action. So all I care about is my time-based range, and I'm waiting for a liquidity hunt at one side of this range. Amazing. As you can see, we take out the liquidity at the high of the range. And this is all on the 5-minute time frame. You don't need to analyze the hourly, daily, or any of that. You're sticking to the 5-minute time frame. This is purely mechanical. And as you can see, this is where we have two up close candles. You're waiting for the market to close below them. Once we close below them, this is where we can trust a selling setup for the market to target this low. And then we have this low resting as well. So once we close below those two up close candles, this is exactly where you can look to sell this market and look for the downside. So you're putting a lot of emphasis on this time-based range because that's basically where everything is going to stem from. And as you can see, this is where the market pushes back into the gap and then we sell off into the sell side liquidity. So the day of recording this video is the 30th of July, and this is the exact setup that formed on this exact day. So let's go over some more examples as well. Moving on to the 23rd of July, exact same scenario. We have a low right here and we have a high. So this is my dealing range. I know this is my time-based range. So we have buy side liquidity above this high. We have sell side liquidity below this low. So also I like to find a discount that's within this market. So we have a premium at 50%. So above this, a discount below this. So this is my range. I'm looking for the market to take out one side of this range, change delivery, and then that's where I can enter within the market. So on the 5-minute time frame, all we do is wait for one side to get taken. And wonderful. As you can see, price trades below the range low. Once we take out the low, where else do we go? We go into a discount of this range, close above these three down close candles, changing delivery. If we trade back into them, this is where I'm looking to buy. So this is exactly what your buying setup will look like, looking for a 1 to 2 or a 1 to 3 trading setup. So the high offers a 1 to 2 right here. If you can aim for a 1 to 3, you can do. And as you can see, price returns back into the order block. So we have 1, 2, 3. These are our order blocks which change the state of delivery. So I have a rule that I like to look for 3 candles which change the state of delivery. I put them together as one. 50% of them should be sensitive. So you can see how sensitive price was. We reject away and trade into the buy side liquidity at the high of the time-based range. You can see, just breaking it down off this one time frame, how everything comes together. And when everything comes together, you have a really high probability trading setup. You don't need to look past the 5-minute time frame as I'm teaching. I previously did make a video focusing on one time frame, but the thing is, focusing on one time frame alone, you need to understand what goes on in the higher time frame, unless you are trading time-based ranges like the one I taught, and that's why I introduced you guys to. And remember, this is only the tip of the iceberg. My one-on-one guys, they're monsters within the market. They know completely where to buy and sell within the market. They like to sell highs and lows. And that's where I'm going to leave this video off. You can see this is how well this repeats within the market. And I know a lot of you are going to find a lot of success using this logic, and make sure to let me know in my DMs how you get on. But those of you that actually want to learn, you've made it this far into this video, you've listened to this video and you've taken notes. And truly, you are the ones that will succeed in trading. Trading is all about time, like not within the markets, like I'm teaching you about time, but time in putting in the work, going after everything, looking at what works within the market, and just building something that is sustainable and works long term. And that's what most of you listening to this video are going to find. But I hope you found this video insightful, what I broke down and gave you insights on. I am going to be building more on this, giving you more insights to this range, and maybe introducing you guys to a New York range if you wanted to learn about that. But if you do want to learn about the why aspect to the market, as I said, applying for the Blueprint Academy is the best route to go. And of course, I will be posting a flowchart on my Twitter page that's completely free regarding this, so make sure to check that out. That'll be all linked in the description down below. And remember, I'm rooting for you, and I hope you do find success in this business. As always, enjoy the rest of your day.